I could feel that minority status, being the black friend that everybody knew, you know what I mean? Being on all the posters and the pictures as the only black person, but look, we're diverse, and being the one on the pamphlet, you know. Um, but then over time, I realized, you know what? I shouldn't be doing that. I need to, and my heart became working with minority um, owners and making sure that minorities understood the how to become homeowners and what to do when they became homeowners. So that's where my passion is. Obviously, I'm open to having all kinds of clients, but specifically, I have a heart for my community and helping us bridge this gap that we're seeing. And real estate definitely is a gap. If you look at the rates, black people specifically have a least amount of homeowners. Why is that? All right, thank you, Tina. Brandy.
Hi everyone, I'm Brandy Webb with Nexa Mortgage. For those of you who don't know who Nexa is or maybe haven't heard of us, we are the largest wholesale mortgage brokerage in the country. So what that means is I work with and represent over 190 different banks. And we do shop the country for the lowest rates and pricing in the industry. And I'm here to bring that here to Corpus Christi and hopefully create some more homeownership by just empowering people, giving them the knowledge they need, and helping them, secure homeownership and turn around and use these systems that have been, used against us and flipping the script on, hey, it's not no fun when the rabbit gets the gun, right? Yeah. So when we get the information and bring it back to our own communities and really strengthen our own communities through homeownership. So I've been in mortgage 2 years. I have a background in banking for 10 years prior to jumping over into mortgage. And what pushed me into the mortgage industry was Hurricane Harvey. So I'm from this community. I grew up in Aransas Pass, just over the bridge. So my house was right between Aransas and Rockport. So we got hit pretty hard. I lost my home in Harvey. So, so did thousands of other people. And so when you see that affect community in such a big way, you really understand the impact of homeownership and what that does to a community. And so I said, you know what, instead of just doing loans, let me do something with a little bit more purpose. And I didn't want to just get a new home for myself, but how do I help these thousands of people, these people that I grew up with, my family, my friends, get homes back for their families, start investing into our own families, not to our landlords' families, and really, starting to bridge the gap between the generational wealth and just giving our kids the tools and passing the baton on to them. My parents were not homeowners until I got into this industry. Who's going to teach us how to be homeowners? And so it's breaking that cycle and then passing the baton on to our next generation where they're not starting from the bottom like we did. We're giving them a platform and we're giving them, something to start from, right? And I think it's just going to lead to all of us growing as a community, growing as a culture, growing together. And it leads to, homeownership gives families a better quality of life, so they're happier. Happy people don't commit crimes, so we have, lower crime rates, and it just contributes to the harmony in our community. And so I'm here to do that today. And so my name is Brandy Webb with Nexa Mortgage.
Thank you, Brandy. Loretta?
Yes, my name is Coretta Graham. I'm the owner of Graham Legal Services. I'm on this panel because I would like to challenge our community when we're talking about building generational wealth is look at commercial real estate. There's no black people in this space. I met one black lady who was in Dallas who does commercial real estate. She was like the only one. We are not in this. This is, and if you're talking about building, creating capital and big money, commercial real estate is something that I'm bringing to the table as an option. Like not only because I'm a homeowner, I went through that process. I figured if I'm renting, I need to own a home so I can build my own equity, as stated earlier. But then now I'm shifting and I want to get into commercial real estate, and so I found some great information that I think needs to be shared. teaching people about passing on that knowledge to the young next generation
People are so vague.
to get into real estate development. Whether they own a home, when they build a home, they also need to consider the commercial side to it, as well as there's personal real estate and then there's commercial real estate. So I'll be giving you information about the commercial real estate side.
All right, thank you, panelists. I think we'll just start with a more general question that I think each of you can touch on, because I think when people are starting to explore ownership, whether that be their own home or commercial space, they kind of have the mindset to what barriers are in the way and what they think they won't be able to accomplish instead of what they can. So what would you say, in your experience, is the biggest myth that you have to dispel about home ownership when you talk to potential homeowners, specifically first-time and minority homeowners? What do they think is in their way that will keep them from owning a home or owning commercial space, and you can dispel that and tell them, yes, they can?
Down payment. I don't have enough money. And they don't know how ways to get around or fix their credit. I think probably number one, number two for me.
Pick up, please.
Oh, down payment, they think they don't have enough money to start. Or they don't know how to fix or what to do about their credit.
I think Steve is absolutely right. Most people that I speak to or consult with that are not homeowners yet, that are looking to get started in the process, when you ask why haven't you done this sooner, or what took you so long, or what, took you so long, you might be later on in life. Why didn't you buy a house right out of college? Oh, because I had bad credit. I got bad credit, I can't be a homeowner. That is not true. The government has programs to help lower income, lower credit borrowers obtain homeownership. FHA allows 500 credit scores and up. Now, a lot of your local retail banks are not going to work with those scores because banks are allowed to put their own overlays. So a lot of the banks are going to say, yes, the government allows 500, but we require a 580 or a 620. And what's wrong is that people don't know, they just accept defeat and they accept the first no. Oh, my credit's bad, I can't do it. No, your bank couldn't do it. Go talk to another lender, reach out to an independent mortgage broker like myself who has access to banks across the country that can find you those special programs. I work with credit scores 500 and up. So, credit scores range from 350 to 850. So I can't help everybody, but when people say I have bad credit, I would say how bad, right? How bad is it? Because I can work with a lot of people. So don't let that keep you from sitting down and taking the first step to homeownership, which is just picking up the phone or reaching out to your local professionals and asking them, how do you get started? Or reaching out to somebody who who already owns a home and asking them, how did they go through that process? Where did they start? And that might be, a finger pointed in the right direction for you, and just go from there.
And then, so Tina, in terms of, we talked about down payments and people thinking that they may not have enough money banked just to get started on that process. How can you, as an agent, assist in that area and to let them know what assistance may be available if they're worried about that down payment and having a certain percentage, saved up before they can pursue the homeownership process?
Well, the first thing I want to say is communication is important, and being transparent. And I have a lot of first-time home buyers, especially, who are afraid to talk, afraid to share their information. And we're not here to hurt you; we're here to help you. What will hurt you is keeping something a secret because we'll find out eventually. And I'm not even talking about me as a realtor, but the lender will find out. So just be transparent. Have a conversation. If you ever call up some random agent or you Google somebody and they don't want to talk to you, that's a red flag. I always have a buyer's consult with people, whether in person or virtual, to really figure out who they are, what their motivations are, what their dreams are, And then I get into, some of the finances, and I always point them to a good lender, because I'm not gonna be able to pull your credit score. You can tell me, I have $10,000 in the bank. Guess what? We can do something with that. We can do something with $10,000. FHA is only 3.5% down of the price of the home. So we can do it. And a lot of people, specifically Black people, they have money. They have money. What they're doing with it is maybe an issue of education and emotional intelligence, as you said earlier, right? But they have the money. I see you with these nice cars, but you're staying at your mom's house. You know what I mean? And that's just the way that it is.
And then, was that one of the triggers that Omar was talking about earlier? Well, Coretta, in terms of commercial space, I think specifically that is an area that a lot of people don't even think to pursue or kind of see it as a pie in the sky thing. If you don't mind sharing what piqued your interest in it, and so far in your research, what you've learned that can kind of open the door to other people possibly pursuing it in terms of achievability.
Yeah, what piqued my interest is that, I'm in the legal realm, and so, I've networked with other law firms, and then, in networking with them, I found that some of them own buildings. Oh, you do that. So that's why I was like, we look forward to this. And just to let you know, typically, here's some typical commercial real estate that you see every day. Office buildings, apartment buildings greater than 5 units, retail shopping centers, medical offices, self-storage facilities. We all know about industrial complexes. That's where, where the Exxon Mobil's and all that, refinery road. Warehouses, mobile home parks, hotels, motels, resorts. People don't realize that all these things that they see every day, somebody is the landlord. Why instead of you giving them their rent to own office space, why don't you own your own office space? And then you can, the landlord. I mean, how many of you know Dr. Geraldine Johnson, the late Dr. Geraldine Johnson? She owned a lot of properties. When I would go, visit her at home and stuff, I'm like, oh wow. Take her kid, and one of the things she would do is take her nieces and nephews around with her when she went to check on her property. That, unfortunately, sometimes the next generation don't want to take on that responsibility, but at least she was trying to make an effort to show her kids and her grandkids
how it works.
What could be. And hopefully inspiring them to want to take over, continuing to manage her properties, because she had a lot. In addition to her child care center, she had a whole bunch of other properties throughout. A lot of people didn't know that. So that's why I'm bringing that other aspect, not only buy your own home, but then consider if you feel led to own a storage unit. How many people need storage? Okay. Warehouse, start small. You don't have to get complicated like apartment complexes and stuff like that. Office building. Right. So that's just to, get you thinking.
Yeah. So, Coretta, when you talk about commercial real estate, I think more people can see up front how that would generate income, right, or help them build wealth. But I think when it comes to home ownership, a lot of people think of it more as like a responsibility, maybe even so a burden, as opposed to a tool to build wealth, build equity, and find a way to kind of grow financially from there. So I would be interested to hear Satina and Randy's take on the equity aspect of it, how owning a home can really, allows you to make an investment to grow on that and understand more the nature of how properties work when it comes to homes as far as appreciation and value and how that can help towards building them.
So there's several routes, and if you guys at the end or in a break want to grab one of these sheets that I have out there, these are just 5 ways to build wealth using real estate. There's many, but I wrote some of the popular ones down. And I guess let's do a case study. Okay. Let's say you're a young couple and you're renting and you want to buy your home. Let's say your credit is okay, and you have a little bit of money saved up. So you might go FHA. Yeah, 3.5% down. No, what's the minimum price for that? 500, right? So there you go. Debt to income ratio.
Your debt to income ratio on an FHA loan cannot exceed 43%. Now, if you're a 500 credit score borrower, what they don't tell you is, yes, FHA goes to 500, but if you fall between a 500 and a 579, then your down payment is going to be 10%. So that's the power of credit.
Mm-hmm.
Credit, when they say credit is king, credit is very important. And I do work with low credit scores, but make no mistake, if you're a higher credit borrower, you're going to get subject to better pricing. You're going to get lower rates. You're going to save more of that money. It's going to go towards your principal. And so you're investing and you're growing your equity a lot faster. You're paying off your mortgages a lot sooner. So that's definitely a possibility. The main thing I see people do with scaling, using that FHA 3.5% down, think about purchasing a multifamily, maybe a fourplex, instead of purchasing your single family home first. And I say this because you can purchase a fourplex with 3.5% down. 3.5% down. Right? You live in one, you rent out the rest, you let it pay for itself. And then when time passes, you go to do a refinance, you pull out the equity in home A, and now you use that money, that same 3.5% that you put down, and now you're buying your second home. So now you own 2 properties at 3.5% down, right? So and investment properties are 20% down if you're doing investment. So you're able to essentially purchase your first investment property using this method and only having to avoid the 20% down and able to get that first investment property, just paying 3.5%. So there's hacks, there's ways to do it. If you're interested in starting and investing in something like that, it's smart to sit down with your mortgage professionals or maybe your local realtor and start asking the right questions. How do I do that? How do I purchase a multifamily, a fourplex, a duplex, a triplex with 3.5% down? How do I do that? And we'd be happy to sit down, and the consultations are free. So what scares people about sitting down with one of us, to me, I'm just like, why? Why is it so scary? Because we want to help. I jumped over to this industry to help. That's my whole purpose for being here. The big bucks are definitely in commercial, for sure. The big dollars, but for me, the commercial owners, those are people that already got money, right? It's the people that already got money. To me, homeownership is a little bit more personal because you're helping people that need the help, honestly.
Well, and Satina, I think the scenario you were talking about was kind of more like a younger startup couple in terms of home ownership and building equity. Can you kind of finish that thought?
Yeah, so that's a great hack. So if you were a young couple and you were really on the uptake, that probably would have been, that could be your first thing you do, right? But you have to live in one of them.
Yes,
for the occupancy for a certain amount of time to qualify for that. Otherwise, you you're in your own single family home, you stay in it for, I would say maybe 3 to 5 years. And generally, you go start a home probably something between 150 and 250 is generally what I see. You can get a new construction, something that's just been done. You know, start on 1,300 square feet, probably 1,400 square feet. You stay there for about 3 to 5 years. Homes will appreciate in that time. Maybe if you're really on the smart end, you're making one extra payment a year would be good. But after that, you can sell your home. You'll sell it for more than you bought it for. Okay, you use that money and you scale up. So instead of maybe being in that low to moderate income area, which you might have started out in, there's nothing wrong with that, because you understand you have a plan, but this isn't going to be your forever home. A lot of people have their emotions involved when they buy a home, especially for the first time. I don't want to live in that neighborhood, or that's too close to this, or too close to that. I want to be over there. And I tell them, concentrate and understand that this isn't going to be your forever home. Right. This is an investment home. This is where you can start. Even though it's not an investment home, it is an investment. And it's for the long term. So low to moderate income areas, there's a lot of programs out there that will help you. The city wants you to buy in those areas. So if you can buy in those areas, get a home, stay 3 to 5 years, it will appreciate in value. You sell that one, and then you go maybe to the neighborhood that you wanted to start out in. You do that, you stay there. Maybe you fix it up. If it's an older home, do not turn it away. A lot of the stuff is cosmetic. Obviously, we're going to work with you to make sure you do your inspections, your due diligence, right? But understand, you can do the floors, you can do painting, you can do whatever. You can fix things. Stay in that home another 3 to 5 years. You might be able to move out quicker than that. Then you sell that one and you upscale. You see as you go, and every time you're making more and more profit because your home's going to sell for more and more. And then, obviously you want to diversify your portfolio, but you could just do that and gain significant wealth. I was saying my brother-in-law started out in a small home. He sold it like 8 or 9 years ago. They went to a bigger piece of property. It was like 10 acres, but this is in a kind of a rural-ish area. Built a barndominium, stayed there for 4 years. Last year they sold it for $700,000. And now they're building outside of San Antonio, an even bigger home. So that's how you can work. And that was only 3 properties. They did that in the span of 10 years. You see what I mean? And that's all you actually have to do. That's the simplest method. Obviously, although hers, I think, would probably kickstart you in an investment faster if you did that.
I think the most important thing about equity, even if you're investing in just your own home, equity is, just think of it as your personal savings account that appreciates over time. It's one of the things that you could purchase other than like a car or another asset that doesn't appreciate, it depreciates. You buy that $200,000 house, you start putting the equity into that home, and later on, 10 years in, it might not be a $200,000 house anymore. It's a $400,000 house now. See what that did? And that's not counting the money that you put in. So what equity is, it's the value of your home minus what you still owe on it. And what's left over, that's your equity. That's your, that's how much money that you have. It's not just the dollars that you put in. It's what is your home worth now? And a lot of people bought a few years ago, and it's here in Corpus. Property values have gone up, 18, 19%. Probably notice your taxes have gone up in some areas. Yeah, definitely do that. Protest. Show up to your council meetings and show up to and protest. And we need more people to do that, to just help control inflation and do our part. People think that, I'm a nobody, my voice is not going to get heard, and you're wrong. Every voice, will be heard. So it's good to show up for those things.
If you want to protest your taxes, you weigh in about 95% of it.
Yeah.
A lot of people don't do that.
So that's really, really good information. We're gonna allow them to answer one more question, and then we'll leave about 10 minutes for you to ask questions of them if y'all have any questions specifically about the real estate, homeownership, or commercial. But I think all of you can answer this because, like Coretta, you're coming from the perspective of you being a homeowner, you're looking to diversify, so you're looking into commercial real estate now, and obviously Brandy and Tina, y'all are experts in helping people to start that journey. So, Coretta, as you're exploring and you're starting to see about diversifying as a homeowner already, what do you, and then also coming from a legal perspective, because you're protecting people's rights as well and making sure that, you know, they're recognized. What do you think are the questions that people need to be asking when they go to a realtor or, you know, a mortgage lender or, you know, an expert who's going to help them on that path to owning real estate, whether it be commercial or whether it's a home? What are the questions they need to be asking of the experts walking in to ensure that they're doing what's in their best interest and that they're getting, you know, the most fair treatment possible?
Well, first, understand they're gonna get in your business. Not be. It's just that's why you want to find a person that you feel comfortable with, because they have to get into your financial business. They're gonna, you know, you're gonna ask them, what's the credit score do I need, depending on what you want to do. Definitely ask them about credit score needed. Ask them about, can I do it without a down payment? If not, you know, how much is the down payment going to be? Definitely ask about getting that pre-authorization letter. Pre-approval letter. That's key. The number one.
Most realtors won't take you shopping to look at any properties or homes without that pre-approval or pre-qualification letter. It lets the realtors know that you're a serious buyer. If you wanted to put an offer in on that house, you're financially qualified to do so.
So, yeah, like, so what, based on the information that you would share on somebody who's pursuing home ownership, what kind of questions can they be asking? Maybe if they don't come to you, since we know that you and Brandy are like the really helpful ones that you want to help people. Say somebody is in another area and they're going to somebody else and they're kind of going in blind and they're not sure. What kind of questions can they be asking to ensure that, you know, they're getting the fairest treatment possible with a very personal and what could quite honestly be a nerve-wracking process?
When you say that they're getting fair treatment, what do you?
Well, I think just to make sure that they are dealing with somebody who cares, not just who cares about them and not just making the money off the deal or whatever percentage or cut there's going to be. And so that way they can also get a realistic response to what they're pursuing. And if they're not at the level where they're ready for what they think they want, you can at least give them the advice that they need to get on that path to what they need to do to be able to eventually own their own home.
I think first of all, it's important to see if you can actually talk with them. Like, I would want, can we have a conversation? That's number one, because you're not gonna get anywhere without really talking to someone. Then I would ask them, hey, you know, this is what I'm looking to do. You know, do you know any good lenders, right? And really, they should be giving you at least 3. Direct requires us to give 3. Some people want to just give their buddies, and you got to be careful about that. Some agents also are not just agents. We're not allowed to be agents and mortgage professionals, but they have like partnerships and things like that. So just make sure that they are giving you at least 3 resources to go to. So you want to do that. You want to ask them, you know, hey, if I, you know, once I get my pre-approval letter, because they should be asking me to get your pre-approval letter, how does the process start? You know, and tell them, hey, you know, this is the area that I'm looking at. Do you suggest any other areas? This is what I want to do. Do you have any suggestions on how I can make this happen, or do you know any other vendors or resources? So it really kind of starts from you as the buyer and what you're wanting to do, and seeing if that realtor is willing to take the time, and that's the key thing. Are they willing to take the time, spend with you, to talk with you for 30 minutes and create a plan with you, or are they trying to hurry up and get you off the phone, or are they trying to just give you one person and sitting next they use that one person to do something? Because then I would be like questioning, well, why do I have to use this one person, and why can't you spend 30 minutes with me to talk?
Okay. Anything to add, Brittany?
Yes, there's two major things that I want to just shine a spotlight a little bit on when you're talking to a mortgage professional, even if it's not myself. And this just kind of goes to, approving and denying the borrower. The one question to ask is, what is the lowest credit score that they work with? Because you can go talk to a lender that works with only 580 and up, and they're going to tell you you're denied. And you go home and you're just defeated, you're denied, you give up. But they're not going to tell you that another lender like myself you could still be approved. You're not denied. You're denied with that lender. Don't take the first no for an answer. Make sure you ask that, if I'm denied, well, what's the lowest credit score do you guys work with? Because maybe you're just not, they're just not the right lender for you. So that's the number one question. Another important question is to ask your lender is, what are the lowest loan amounts that they work with? Because it might not be you can have great credit and you could be a qualified borrower, but they don't do loan amounts below 100,000 or below 150,000, and you might be trying to buy something in that price range, and they're denying you, and they're not telling you why you're denied. They're not telling you because you're denied because they don't do amounts below, what you're trying to ask for. So again, you're just using the wrong lender. So when you talk to a lender, those are two important questions. What's the lowest credit score you guys do? What's the lowest loan amount that y'all finance? And that's a good way to determine whether they're the right lender for you to even be applying with.
That's good.
Great information.
That's good information.
Yeah, thank y'all both. Okay, so we have a little bit of time for questions. If anybody has any questions for any of the panelists, yes, Ms. Cheryl?
I would like to know, you guys have all this knowledge. Are you guys going to the high schools or the junior high school to start, because most of us are adults now. And so to start, as you say, to feed the young youth, about the knowledge that you have in owning a home, because most of you don't have parents that own homes. So, and they don't know how to talk about owning a home. So do you guys go around and talk about this to junior high, high school youth? And especially Black and brown children?
Yes, and most recently we just had a No Excuses real estate event, and it was also a teen real estate event where it was at Joe's Crab Shack on this past April 22nd, so I just did one there, where we were trying to teach teens how to get into investing. Because there's teens that own real estate, there's ways for them to invest, and especially if they have parents that are business owners themselves and they want to see their kids start the entrepreneurship path early. Real estate's a great way to do that. We do those periodically. We have them once a month. My name is Brandy Webb. You guys can follow me on Facebook. Best Home Loans on Instagram is my Instagram. And we do these events periodically here in Corpus Christi. So we're right here. We're local, and they're free events. They're free. We provide a buffet. We have it at Joe's Crab Shack on the 3rd floor at the very top. And you just come in, you sit down, you get the information that you need. You might just want to learn how to be a homeowner. You might want to learn how to be an investor, and you might want to learn how to be a teen and start getting into this. Or maybe the teen is interested in real estate and their parents are not in those fields, but they want to learn. Let them start learning as early as they can. Keller Williams and I also partnered up to do local seminars where we are going to teach homeownership and homeownership basics. We're going to be picking a different technical school or high school or college every quarter, and we'll go and I've done one at STVT Technical Institute here, and whoever will have me, really, whoever will have me. If you guys, any of you guys, I just spoke at Mr. Clifton's, wellness event yesterday, and we spoke a little bit and how that, your mental health and your wellness. I mean, what is our biggest stress in life? A lot of it is surrounded by our financial stresses and how we're going to pay our rent, how we're going to pay our bills. I mean, that's where most of our stress comes from. So definitely I'm available to speak to that anytime, and I'm always looking to get back.
And I just want to ask one more question too, right? Is there an investment team that you know of here in Corpus Christi where people can invest in buying property, commercial?
No, I just know there's some, I think like Charles Tryon builds apartment complexes and stuff like that. But there's like no group of people who say we're gonna come together and buy this storage unit or building or invest in our first duplex. You know what I mean? We don't have it, so maybe you can start.
Right, yeah, I see that.
Okay, I saw a few hands go up, so let me try to go in the order I saw. I'll start with you, and then we'll move to you, and then Katie will come to you. Okay.
So I know that you said that there's a lot of programs to help residential buyers, but do you know of any for commercial real estate?
With commercial real estate, yes. There is ways to invest in commercial real estate. With commercial real estate, you gotta understand that it's a lot different than qualifying, because when we're dealing with commercial, it's now a business transaction. It's no longer what we consider a mortgage, just a typical mortgage. We consider those business loans. So now we're not qualifying the person and the personal income. Now we're looking at the company, the projected income of the company, and what the company's gonna make. So we're gonna qualify the business and what they stand to earn, the type of business matters, all those things, and not so much your personal qualifications or your personal income. Is not what we're reviewing when we qualify you for a commercial loan.
So if you have an LLC, then that business has to be doing pretty well in order to get loans, or if my LLC is brand new,
Ready? There is programs, some want you to be in business and show that you've been in business for a little while. And it's gonna vary per lender. Some lenders will tell you, I wanna see you in business in 12 months. Some will say 2 years. 2 years is a good mark to start looking into if you wanna finance your own commercial building, let's just say, for your LLC. And there's ways that you can, finance, and there's certain loan types, like a debt service coverage ratio. It's called DSCR loan. It's geared towards, and it's investor friendly loan, but it allows you to escape the high investor interest rates. And what it does is we qualify the property, not the person. You qualify the property, and as long as the property is going to generate enough income to cover your principal, interest, taxes, and insurance payment, basically the property is going to generate enough income to make the mortgage note, then you're going to get approved for that loan. The qualifications for that kind of loan, you're going to need a 640 credit score. And they might be interested in how long you've been in business. Just want to see maybe your last 6 months. We might want to see, if you're RV park, or if you're in the hospitality industry, or if your rent rolls, and certain things like that, which are just questionnaires on basically how your business is doing and how much income you're generating. So we know how much basically we can safely lend you.
What did you say the name of that?
It's called a DSCR loan. And with those loans, they actually prefer you to close in an LLC. It's the preferred method in that type of loan. Now those are more for investing, so that type of loan's you're not going to be a primary, you're not going to be living in it, you're going to be making money with it. To be for your business or for you to rent out. So it's going to be as a source of income.
Okay, in the interest of time, we'll move on, but our experts will be here, and during the breaks, please talk to them, get that information, get contact information, so that you walk away with what you need from today. But for now, let's move on to our next question.
Oh yeah, I guess where is like the housing market going? I mean, I want to buy, but like you're hearing like interest rates as high as 6 and 7%, and like maybe you should just wait another 6 months, wait another year. Like, what's your like?
I tell you right now, the best time to buy is 5 years ago.
Yeah.
No,
It came and went.
or in 2020.
No, what I mean to say is anytime someone else wants the best time, I would say last year, like previously, right?
Don't let interest rates, we say marry the house, don't marry the rate. Okay,
Right.
Interest rates are like roller coasters, they're gonna come up and come down, and they're gonna be entities outside of our control that will determine that. What you can determine is what you do with your own money. So I say, let's say you wanna buy a house this year, now they can only project what the interest rates are going to do. There's a projection that maybe the interest rates might go down next year, right? But when interest rates go down, what happens? More buyers come on the market, you have more competition, and home prices go up. Okay, so there's that. So I say, 6 to 7%, really, I mean, really, that is basically pre-pandemic average rates.
Those are absolutely favorable interest rates. Now, if we think before 2008, before our real estate market crash, I mean, when my grandparents bought their house, they paid 18%, and nobody was blinking, and people were buying houses every day.
Right.
Nobody was blinking. So when people say that interest rates are high, I kind of laugh a little to myself because they're not high.
They're not high.
Those 2 and 3% interest rates that we saw a few years ago are historically low, which means never before in history, and we'll probably never see them again. So don't get stuck on those interest rates. We have very favorable interest rates right now. I'm a wholesaler, so I'm between 5 and 7 and the high 7%. You can still get really, really good interest rates. I just pre-approved someone yesterday with a 5.99%. Now your interest rate is going to be also determined on your profile. Your credit has a lot to do with what rates you're subjected to. But what I will say to people that say that, they say that a lot, interest rates are high, rent's 100%.
Exactly.
So,
Exactly.
And
no, it's higher than that.
Right. But if we're talking specifically about Corpus Christi, right now we're having more and more homes come on the market. We're about to hit our heavy season. It's actually, our listings are up as of last month, 66% to last year. You have a lot more homes to choose from now. You can really choose your home. It's still a seller's market, but it's not a heavy seller's market. So you're not going to have as much competition. You have more to choose from, and you're not having to pay $20,000, $30,000 over anymore. You can come in and you can even start asking the sellers for some contributions now in this market. And home prices have risen from a sales perspective by 6%. You can still, if your home is priced specifically between $200,000 and $300,000, that's one of the best price markets to be in, and that's generally what I see people buying in. So don't marry the rate, marry the house, and you can always refinance when interest rates come down. You can always do that.
Let's get to Katie's question, and then we'll probably have to wrap up after that so we can move on to our next panel.
I don't know why is it? My house is paid for, I'm buying a second house. I can use some money in my first house for equity, pay cash for the second house, or refinance the second house.
Do you already own the second home?
I own the first home,
You own the first home.
yes.
So in order to purchase the second home, you're going to need to either pull out all the money and buy it cash, or you could pull out just enough to do your down payment. But just remember that you're going to have 2 mortgages, so keep that in mind. So if you take out, it just all depends on what you take out on your first house. If you have enough in your equity in your first home to buy that cash, why not?
Do you own it, your first home free and clear?
Yes,
Okay.
Okay.
So it's all going to be.
Oh, okay. So if you own it free and clear, then you'll just have one mortgage essentially.
so the interest rate be lower on me getting a refinance on my first house.
With your interest rate, not necessarily. Your interest rate's gonna be based on your profile, whether you're purchasing or refinancing.
Exactly.
Right.
So it's no different.
Your interest rate's gonna be determined on your loan program type. Are you getting a 30-year conventional fixed, or are you getting an FHA loan, or you getting a VA loan? Because the rates vary by loan type and also by your credit and your overall portfolio. So there's a lot of different things and factors that go into what rate you get. It's not just your credit. It's not just, there's a lot of factors that go into that.
All right, I think it was a very healthy discussion. If we can thank our panelists. Again, they will be here. I know at least Theta has a table set up outside, so please grab her information.